You know, every great venture, every single game-changing product or successful nonprofit, it all starts with that one little spark, an idea. But let's be real. How do you know if that spark can actually catch fire? Well, today, we're going to talk about the critical bridge between a brilliant concept and a successful reality, the feasibility study. So this is the question, right? The one that keeps every entrepreneur, every creator, every planner staring at the ceiling at 3 a.m. You're passionate, you're driven, but there's always that tiny seed of doubt. Is the market ready? Are the finances even close to sound? Is this idea truly viable? Answering this stuff requires way more than just guesswork. It demands a real, solid strategy.
All right, so here's our game plan. We're going to walk through exactly how to build that strategy. We'll kick things off with that core challenge, then we'll define what a feasibility study actually is, break down its key parts, check out some awesome real-world success stories, and finally, talk about how you get the green light for your own big idea.
Okay, so this right here is the crucial moment. It's all about taking that initial excitement, that what-if feeling, and turning it into a concrete plan that's backed by actual data. Now, this process isn't about crushing dreams, not at all. It's about giving them a solid foundation to build on.
So, what's the tool that gives you this rock-solid foundation? It's the feasibility study. I want you to think of it as a complete and total health checkup for your business idea. I mean, before you pour your time, your money, and all your energy into something, you do a thorough checkup to make sure it's healthy and ready for the real world, right?
The really crucial thing to notice here is the timing. This all happens before you've invested a ton of time and money. It's a preemptive strike, really, looking at everything from market demand to what it's going to cost to run, all to prevent a super costly failure down the line. It is literally your best defense against becoming just another statistic.
And because this is all about making smart decisions, it's not just for tech startups in Silicon Valley. Oh no, the applications are incredibly broad. I mean, whether you're a nonprofit trying to maximize your impact, a city planning a new park, or a developer checking out a new property, this process is absolutely essential.
Okay, so what actually goes into one of these studies? Let's pull back the curtain and deconstruct the whole process. We're going to look at the 4 core pillars that hold it all together. It always starts with market research. You have to know who you're selling to and who you're up against. Then you get into the financial assessment. Do the numbers actually work? Can this thing make money? Next up is the operational analysis. What do you physically need? Staff, tech, space to make it a reality. And finally, all this data comes together in a super clear recommendation. A green light to go, a yellow light to maybe tweak things a bit, or a red light to hit the pause button.
That is a fantastic question, because not every project needs the same level of intense scrutiny. A small product launch is, a totally different beast from building a new hospital. The depth of the analysis really needs to match the scale of the investment.
And this table shows just how it can scale. You might start with an essential tier, a quick 5-week overview. The confidence score here basically means, hey, the first signs are positive, but we definitely need to do more research. For a bigger bet, you'd want a strategic analysis, which gives you a much higher level of certainty. And for a major multi-million-dollar investment, you're going to need that premier deep dive, which delivers an entire implementation plan with a 95% confidence score. I mean, at that point, the data's pretty much screaming that you've got a winner.
Theory is great and all, but what does this look like in the real world? Let's jump into a few case studies where a feasibility study made all the difference.
Okay, first up, Health Tech Solutions. They had this cool idea for a wearable device to monitor heart health. The problem? The market was already jam-packed with big players. They needed an edge, and they needed it badly.
So, their feasibility study uncovered this one crucial insight. Customers wanted more than just heart monitoring. They wanted overall wellness features. By adding those in, Health Tech Solutions made their product stand out and captured an incredible 15% of the market in their very first year. Just amazing. So, the huge takeaway here is that the study didn't just give them a simple yes or no. It actively improved their product. It pinpointed a specific gap in the market that they could completely own, and that transformed their entire launch strategy.
Next, let's look at a nonprofit called Green Earth Community Initiative. They wanted to expand their urban gardening program to 5 new cities, but, and this is key, they had very limited resources. They absolutely could not afford to get it wrong. Their study analyzed demographics, community interests, the whole 9 yards, and it recommended they focus on just 3 of the 5 cities, where support was the strongest.
And the result? A perfectly targeted launch that grew their volunteer network by 30%. They put their resources exactly where they would make the biggest splash.
And that is such a powerful lesson for any organization, right? It's all about being strategic with what you have to avoid those costly mistakes and maximize your return, whether that return is measured in profit or, in this case, community impact.
Our final case is a company called Trendy Threads, a super successful online clothing brand. They wanted to make that big leap into physical retail stores, which is notoriously difficult and really expensive. They had to know if their online magic would translate to the real world.
Their study did more than just look at finances. It pinpointed specific urban areas that already had a strong online customer base, but get this, very few physical competitors. So, the 2 pilot stores they opened, they didn't just meet expectations, they smashed their sales projections by 20%.
You see, the key insight here is how the study minimized risk. Instead of just throwing a dart at a map and hoping for the best, they used data to make a precise, surgical decision that paid off big time, right from the get-go.
So it's pretty clear, right? The goal of a feasibility study isn't to hold you back. It's actually the exact opposite. It's to give you the confidence in the data you need to leap forward in the smartest way possible.
So when you boil it all down, this is the ultimate value. You minimize your risk by replacing assumptions with cold, hard data. That clarity, it gives investors the confidence they need to back your project. And maybe most importantly, it gives you a clear, actionable roadmap to turn your vision into a reality.
So, I'll just leave you with this thought. Whether your big idea is a startup, a new product, or a community project, just think about it for a second. What is the single most important question you need a data-backed answer to before you move forward? Answering that one question? Well, that's the first step to getting your very own green light.